G'day, legends. I hope that you are having a fantastic day. And we're back again with someone on the channel who's been on multiple times, and we appreciate it every time. Dr. Richard Connolly, thank you for coming back on.
Good morning, Willie, and good morning, everybody else.
Mate, firstly, thank you for coming back, and thank you for coming back on in very short notice. As everyone has seen, and I guess it's a lot of the headlines around the Russian-Ukrainian conflict, is the oil price decline and what is happening, of course, with Trump's tariffs. And it is, of course, very difficult to get our minds around exactly what is happening, exactly what the impact may be, and what does recession mean, what may, people classify as collapse, but it may just be recession. And you and I, just pre-recording, you noted that the single most important variable for Russia's economy is oil prices. So can you quickly just give us a rundown of what the Brent price is, where it's sitting, and I guess what impact we may see in the short or mid-term of this?
Sure. So I think the first point is things are changing so rapidly at the moment that my last reading of the Brent oil price is probably already higher than it is in practice. But as of late last night, the Brent price was $63 a barrel. And that compares with an average of, it had been hovering in a band between 70 and 80 in 2024. And in the first quarter of this year, it had been hovering in a band between sort of 65 and 75, towards the higher end of that band. So we've seen a reduction. It hasn't been as sharp a reduction as we've seen in global stock markets, for instance, a lot of which have lost they're at 20%. Well, actually, it's about that. It's about 25% from peak prices earlier on this year. So it's the early stages of what looks like it could be a prolonged decline in all global economic indicators. Of course, Russian oil it trades at a discount to Brent. So Russian oil is trading at the moment in the high 50s. So about $57, $58 a barrel. Again, there are different blends sold to different markets, but that's about the average at the moment. In terms of what happens for the future, a lot is going to be determined by US economic policy, and in particular, the Trump administration's tariff policy. If the Trump administration sticks to imposing these enormous tariffs, in particular on China, that's going to cause enormous disruption to global trade and supply networks, which is why stock markets are behaving the way they are at the moment. That's going to cause a big decline in the profitability of a loss of US and international firms that are integrated with China and the wider Asian economy. If that happens, and that's what's being priced in at the moment, that is going to result in a slowdown in economic activity, a slowdown in manufacturing, a slowdown in industrial activity, and all of these things together will result, I think this is one way we can be very confident, will result in reduced demand for natural resources, commodities, and oil being one of those. So oil's the only natural resource or commodity price that's in decline at the moment. Copper, other metals, are also going south. And that's because market traders are anticipating that US economic policy is going to cause, if not a slowdown in the global economy, then possibly even a recession. If that happens, what is the depths to which the oil price could go? We can look at some recent global recessions to give us an idea as to what that might look like. In 2020, when oil prices collapsed for a short period of time, they went down, if we look at Brent, as low as $30 a barrel. They didn't stay there for that long. They recovered in the second half of the year. If you look at the average price in 2020, it wasn't sort of $25, $30 a barrel. It ended up being higher than that. If we go back to 08, 09, oil prices then went down to about $25 a barrel, depending on what we're looking at, Brent, WTI, etc., for a brief period of time. And that was from an even larger peak. In both of those very severe recessions, the price collapsed, but it stayed low. It sort of troughed for a brief period of time and then recovered. So that's, I think, worth bearing in mind here when we're thinking about what might happen to the oil price. The chances of a steep decline, I think, are high and rising. Whether they'll stay there for months or years is an entirely different thing. This could be a relatively brief period of time. And that's important when we think about what impact that would have on Russia. Because if prices go down to, let's say, $30, $40 a barrel, and they stay there for 3 months, we can draw very different conclusions about what that will mean for Russia than if prices were to go down to 30 and stay there for 2 years.
Right. Yeah, because what I'm seeing is that Russia, for their budget, they've taken into account, and correct me if I'm wrong on any of these figures, but a average price of around $69, $70 for the oil. And what I think we're not taking into account, or a lot of people aren't, and I know I did at the beginning, is we're taking into account today's price, not that it was trading over that for a period of time. Now it's trading under that over the 12 months, it's an average price of this, that it would need to sink that low for it to still be outside, I guess, of the budget. And you say that if it's sitting there for 3 months, significantly different from 12 months. But what sort of difference are we really looking at between what would be a recession and a collapse?
And that's a very good distinction, or a very important distinction to make there, because I think a lot of people conflate an ordinary recession. Recessions are reasonably ordinary by in Russia and elsewhere in the world, whereas a collapse is very rare. If I were to try to give you a definition as to what a collapse would look like, if we're thinking about Russia, I would think probably from 1989 to 1996 would be an economic collapse. That was something that approximated. It was in many ways more severe than the US economy during the Great Depression in the early 1930s. That was a collapse. The Soviet Empire had disintegrated, and there was a genuine collapse in economic activity. Even then, life still went on. People still had businesses. The government continued to spend money. But that is, I think, something that we can consider to be of the magnitude of something like an economic collapse. A recession isn't a collapse. Russia's had recessions in 08, 09. It had a recession, a contraction of economic activity of 7.9% in the global financial crisis of 2008. So in 2009, the Russian economy contracted by 7.9%. That was severe. And that came after a period of rapid growth. But it wasn't collapse. The Russian economy continued to function. The government continued to spend. People still had jobs. There wasn't mass unemployment, etc. And that was a pretty severe recession. It had a much milder recession during the coronavirus in 2020. And that was a contraction of around about 2 to 3%. And it was, again, relatively short-lived. So that wasn't a collapse either. So I think making that distinction is an important starting point here, because what we're seeing with the global economy behaving the way that it is at the moment is the likelihood of a recession in Russia and a lot of other countries is rising. The economic indicators in Russia in the months before Donald Trump imposed his revolutionary tariffs on the countries of the global economy, those economic indicators in Russia were already pointing towards a slowdown. This will simply accelerate that slowdown, perhaps turn us into a recession. So I think we should be looking at a recession, and we should be thinking, well, how bad would it have to be? How low will oil prices go, and what type of effect will that have? Now, I've done some calculations because professionally I'm required to do some modeling. Now, I'm not claiming that this is in any way going to be precise, but it'll give you a sense of what would happen if prices got to a certain level, what type of consequences, what might we see. Now, I ran a scenario where prices were, the oil price declined to $40 a barrel and it stayed there for 12 months. If that were to happen this year, if the oil price is at an average, as you point out, that's what we need to look at. Not that it hits 40 for a day, but it stays at 40, or rather there's an average of 40 for the whole year, then I would expect the Russian economy to contract by anywhere in the region of between 4 and 6%. So that would be a severe recession by Russian standards. That would be the most severe recession since the global financial crisis of 08, 09. So that was, as I said, the Russian economy contracted by nearly 8% in 2009. So it would be the most severe since then. Now, in order to get to $40 a barrel on average, we'd have to see oil prices this year probably go down to about $25 a barrel for at least a quarter. And that's because in the first quarter, prices were hovering between sort of, around about $70 a barrel. And they're still around about 60. So we're nowhere near 40 even yet. So I still think it's unlikely that we'll see $40 a barrel on average for 2025. I mean, I'll say unlikely, you never know. But if it were to be 40, if it were to average at 50, 55, then you might see a recession of 2 to 3%, right? Again, that's significant. It's not that will cause disruption. It will cause some pain to some people. It will impose greater strain on the Russian budget, but it will not amount to a collapse. It will simply be a cyclical, recession in the commodity cycle, with it going down. Russia, as a major exporter of natural resources, will suffer. But we shouldn't exaggerate how much it will suffer. It will have sources of resilience. It still has sources of state savings that will be mobilized to support the population in the event of a recession.
And that's something I tried to touch on yesterday, was even down to building up gold reserves into the hundreds of billions of dollars in the years leading up through 2014 through to 22. Massive amounts of buying of those, which we have seen then increase in value over that time too. And that touching on that may give, I guess, a bit of a buffer for other resources volatility. But in a real sense, let's go with that $45 a barrel, say, and we see a 2 to 3% then retraction in the economy. What does that really look like at the other end? I guess not only for the consumer, the average Russian, but what does it look like for then the ability to wage and continue the war in Ukraine?
Well, there were a couple of ways of looking at this. If we have the recession, then we need to break it down and think, well, what does it mean for public finances? What does it mean for households? What does it mean for industry? So we need to look at each one of those in turn. The one that's most important, I think, is certainly for the ability to wage the war in Ukraine, is the fiscal position. So let's maybe come to that last. Let's just start first. If you have a recession of 2 to 3%, we'd expect to see a slight increase in unemployment. Maybe unemployment might go up by a percentage point. It's currently 2.3, 2.4%. So maybe it'll go up to 3, 3.5. That's still exceptionally low by international standards. That's still very low even by Russia's own standards. And if you're in the Kremlin and you were looking for a silver lining, you'd say at least it would ease some of the pressure in the labor market, because that's been one of the bigger sources of concern for Russia. You would also expect to see, as a result of that, slightly lower wage growth, if not a wage growth contraction. Again, that's not great for households, but they've just had 3 years of very rapid wage growth, real wage growth. It might be better for companies who can see their wage bill reduced a little bit, taking a bit of pressure off them. You might also see inflation ease a little bit as well, because when you have a recession, it tends to be deflationary by definition. So some of those indicators that were causing concern for Russian households, Russian businesses, and Russian government over the last year, tight labor market, inflation, they may all ease as a result of a recession, but the price you pay is a bit more unemployment, and maybe less money in people's pockets. You may see an increase as a result of this, an increase in financial distress amongst Russian firms, and the Russian central bank might reduce the interest rate. You would expect it to do that. The key rate currently is 21%. If there's a recession, the likelihood is they will reduce that, and that could again help mitigate the impact of this recession. So, economies are complex systems. So when we look at the impact of one variable, the decline in the price of oil, we can see that there are lots of sort of consequences, some of which might be quite positive in some ways that are unexpected. So that's what we'd expect to see, sort of in rough terms, for the population. What would it mean for the government? Well, if this happened, you'd see slower tax receipt growth. And therefore, Russia's plans, if they want to spend what they're spending this year on defense, which is around about 17 trillion rubles, if they want to continue to spend that, then they will, in all likelihood, have to borrow. Their current spending plans envisage that they would only run a budget deficit of 0.5% of GDP. If there's a recession, they will have to run a bigger budget deficit, almost certainly, because tax receipts won't be as high, because a third of Russia's tax receipts are oil and gas, mainly oil related, and they will inevitably decline. There's no doubt about that. They might not decline by as much as some people think, because the ruble would also weaken, and that would again ease the pressure on the Ministry of Finance. But you would see a reduction in tax revenue, so they'd have to borrow more. How much? I suspect probably in the region of about 3 to 4% of GDP is the size of a budget deficit to continue spending on the war, and probably also to target some spending on supporting the population. Now, step back. Is that a lot? 3 or 4%? A budget deficit of 3 or 4% is not particularly high by international standards. The United Kingdom, France is running a budget deficit of anywhere between 6 to 7% of GDP this year. The US is much higher than Russia. It's not particularly high, and certainly not high by the standards of a recession. Most countries spend more and run budget deficits during recessions. Second question, can Russia afford it? Does it have sources of savings? Well, it does. The gold reserves that you mentioned there, they are part of its foreign exchange reserves, and they're not typically used to support state spending. They're to support fluctuations in Russia's balance of payments. So in a way, they're not even necessary to bring into our thinking here. What you want to look at instead is the National Wealth Fund. That is where Russia's Ministry of Finance keeps its savings. That's its sort of savings pot, as it were. Now, that's shrunk in recent years, but there is still enough within the liquid part of it to support a budget deficit for this year of 3 or 4% of GDP. So they could just use that alone and say that will cover this year's budget deficit. If then this recession extended into next year and the Russian government needed to borrow more, then they could then draw down in some way from the illiquid, the part of the National Wealth Fund, which is state savings which are invested in longer term projects. And they could maybe borrow against the back of those. My suspicion is they wouldn't do that. What they do is instead go and borrow from state-owned banks in Russia, right, who are sitting on vast cash piles because they've been making massive profits over the last 3 years because interest rates have been high. So I'll leave it at that. I won't complicate it anymore for you or your listeners. But the point that I'm making is that the size of the budget deficit that Russia would likely have to run to maintain the war amidst a recession probably isn't that high. And it does have the resources already in place to be able to fund that. It wouldn't need to go cap in hand to the EU and say, well, can you lend us money for peace or anything like that. They would be able to support this themselves with their own resources. So if it is a recession of that magnitude, and if it is an increase in government borrowing of that magnitude, in my view, I think Russia is well positioned to be able to ride out the storm.
Right. Yeah, it's a very difficult thing, I guess, for people to wrap their head around how much, I guess, pushing and pulling that there is in global markets. That we touched on it quickly yesterday about one of the problems is because the ruble is stronger with the oil lower, you're getting less rubles per a barrel of oil. It's a very difficult thing, I guess, to get your head around if you haven't been doing it for decades like yourself. But I guess in short, what we are sort of going against the narrative of is this promised economic collapse that has been promised for now years that is imminent. And when we look at the numbers, even at fairly bad figures and looking at even future figures to go lower, that it still isn't this cataclysmic event where everything starts collapsing and we have an 1989 to 95 sort of collapse again in Russia. The one difference which I see in this, and I want to get your, I guess, thoughts on, is that unlike the sanctions that the EU and the Western world, America, that they put on Russia was aimed at Russia to reduce then Russia's profits, to reduce their global trade. Where Trump's tariffs are aimed at everybody, that it's not only stepping into this, let's call the next 12 months, that Russia, is going to have reduced profits to fund the war. Yes, but also the tariffs aimed at the EU as well, that they may have reduced profits and a slowdown of economies to be able to fund Ukraine in the war. How do you see this, I guess, coming to fruition?
And that's an excellent point to make here, is that, as you say, sanctions, when they were put in place 3 years ago, were designed to inflict economic harm on one country. And then the rest of the world, in theory, in particular the sanctioning powers, would have been unaffected. Now, we know in practice that wasn't the case, that Europe in particular suffered immensely as a result of the war. But that was at least, I think, the theory. Whereas what we have, as you've just described with tariffs, is a much wider economic impact that will be shared by all countries across the world. So what we'll have here is, even if Russia does go into a recession, which, if things continue on the lines that they are at the moment, I suspect will happen, it won't be that the United States and its European, are they still allies? But European associates are in a position where they're unaffected. They will, in all likelihood, be going through a recession themselves. And that will cause even greater fiscal strain in those European economies. I mentioned earlier that in France, they are struggling to reduce their budget deficit from 7 to 6% of GDP. And that was when the economy was, at least sort of bumping along the bottom. If it was to enter a recession, it would be even more difficult for France to get on top of its fiscal problems. That's a problem shared by the United Kingdom. That's a problem shared by a lot of other European economies. The United States would, in all likelihood, enter a recession as well. And there will be all sorts of turbulence in global currency markets, etc. Point being here, you're also going to see unemployment rise, living standards decline in these countries. Now, if that happens, we should also ask the question, what's the ability of these states to continue to fund the war, which is to say, to provide economic support and military support to Ukraine? Because if people are getting poorer, if unemployment is rising, then the importance of Ukraine is likely to diminish in a lot of countries. We already saw this happening, over the course of 2023 into 2024. So if we look at the trend line, we can see that, generally speaking, support in the US, in most countries in Europe, for Ukraine had diminished. I would expect that would accelerate if the advanced economies of North America and Europe also enter a recession. So that, I think the other missing country we haven't mentioned, or haven't mentioned directly here, is what would the economic impact of this recession be on Ukraine? And Ukraine's in a very perilous position fiscally. It relies on outside support to fund all of the size of its budget deficit pretty much approximates the size of its military spending. That is all provided by outside. And that's even whilst its economy has been growing and it's been increasing taxes. If there were to be a global recession, it will impose great strain on Ukraine as well. So again, when we're thinking about Russia's ability to stay in the fight, we have to compare it to everybody else. We have to look at it in relative terms, not in isolation. And the picture isn't very good for Ukraine and its allies either.
Yeah, that's something that I think is getting left out of this, and I know that even yesterday I left out of mine, is that no, these tariffs are hitting everybody, and that price per barrel of oil, that is hitting all the oil countries as well. What role does China play in this? A huge consumer of natural resources, and of course going into a trade war with America. How much does that trade war that we are seeing unfold as we speak, how much will that influence then this global economy and potential for recessions worldwide?
Well, when we start speaking beyond Russia and Eurasia, my sort of level of expertise starts to diminish. So I give you that health warning before I say what I'm about to say. Of course, I don't have a crystal ball. What I do have, though, is from watching the Russian economy, in particular watching oil markets over the course of my professional life, is, you always have to look at China. You've had to for the last 30 years because it's been probably the most important variable. So what goes on there affects global commodity markets. So I'm going to base what I say now on this sort of general level of understanding. It seems to me that what will matter will be whether or not China can ride out the worst consequences of a trade war. So let's envisage a scenario where it imposes reciprocal tariffs on the United States, that trade with the United States declines sharply. But that it doesn't impose those tariffs on other trading partners, that in fact it then trades more, it's trade diversion, with Japan, the other countries of Asia, with the European Union. And so far, we're not seeing any signs that China wants to disengage with any other countries. And we're not seeing any signs that the European Union, for instance, wants to disengage from trade with China. If anything, I think we should probably expect, from what we've seen so far, that other countries will trade with each other more to offset the decline in trade with the United States. Now, if that happens, all things being equal, I would expect that alongside probably an increase in fiscal support from the Chinese government for Chinese exporters, manufacturers, etc., that could prevent a recession in China. It might mean a slowdown in China, but it might prevent a recession. And if that happens, a series of steps here, but if China avoids a recession, yes, the price of global commodities might decline, but they might not tank, to use the term. They might not sort of plummet to, if we're thinking about oil, to $20, $30, $40 a barrel. It might be that things, you see a decline, but it doesn't hit a really low floor. And if that happens, that will be, on balance, good for Russia. That will reduce the impacts on Russian economic activity and the Russian budget. So a lot really depends on how China responds to this. If, however, it were to become much more inward-looking and also impose restrictive measures on other countries, I'm not quite sure why it would do that. But I'm not sure why Donald Trump's doing what he's doing, but he is anyway. If it were to turn inwards, then you start seeing a scenario more like the 1930s, where countries become more autarkic, which is to say they look inwards and seek to reduce trade with all trading partners. Now, thankfully, as I say, we haven't seen any signs that, the US apart, any countries really want to do that. But that would be a worst case scenario, is if they did that. And if that happened, then we could see a really catastrophic scenario for global commodity prices, because then I think you would see a much sharper recession. So, you're right to ask the question, and in a sense, the answer lies in the question, what happens in China will be probably the most important thing in shaping Russia's economic prospects. And after all, it's Russia's largest economic partner now, trade partner. It is by far the most important trade partner. So what happens in China will be of enormous importance for Russia. But my suspicion from everything I've read is that China won't turn in on itself. It will trade with other countries, and what they will do is increase the sort of fiscal deployment of fiscal firepower, which the Chinese government has, to support economic activity there. So that should, on balance, be a good thing for Moscow.
Yes, and I know this is outside of your wheelhouse a bit, but something that I've been looking at is how China, fight wars over their absolute thousands of years, is the idea of fighting barbarians with barbarians. If you're not yourself doing it, you're pitting your adversaries against each other. And this idea of, well, China may be very open to doing trade with countries that have also been sanctioned by the US to create more friction between the US and the EU, or then other nations, that it seems to fit in this overall strategy of how China has operated previously in many different sectors, from when it was, random tribes on the border through to then in global markets and wars as well. Do you think that a global then retraction of economies could influence countries to look at lifting sanctions on Russia?
It's certainly possible. I think here, it's not so much the recession that would do that, but I think it's more this unilateral tariff policy that the United States has imposed on allies and foes alike. I think the problem we have, again, stepping back and looking at that type of activity, is that you're reducing the incentive for those countries to align their policies with the United States, right? So, when the United States allowed countries access to its market, it gave them a piece of what is still an extremely valuable pie, right? It incentivized them to cooperate with the US. So And if we take China, then Chinese firms would and Chinese government bought a lot of US Treasury bonds, which enables the United States to enjoy the positive consequences of holding the world's reserve currency. So it's put in very simple terms, the United States' openness to the global economy and the fact that it intertwined with all of these countries gave them a big stake in cooperating with the US. Even when there was friction, countries realized that they didn't want to push friction too far with the US because they had a lot of economic benefits to trading with it, to integrating their financial markets with it, to using the dollar, etc. What we're seeing over the last few weeks, or what we've seen over the last few weeks, is perhaps the beginning of a new era where the United States is not offering those benefits to countries. So it's not offering that same incentive to cooperate with the United States. So threatening countries with secondary sanctions or with that cooperate with Russia is going to have less power, less influence, less traction in this new era. Because these countries are going to sit there and think, well, you've already got an imposed, very onerous tariffs on us for no good reason, as far as we can understand. We're already suffering economically, and we're now decoupling from you. Our incentive to, if not obey you, but our incentive to cooperate with you is much reduced. So I hope I've explained that in simple terms, the calculus that I think a lot of other countries will go through now. And if the tariff trajectory continues on its current course, I don't think this will result in an immediate sort of rush for people to do business with Russia in the next few months. But what it could do is augur a very gradual sort of reintegration of Russia with other parts of the global economy, who had previously been afraid of US secondary sanctions or the consequences of US displeasure with them doing business with Russia. I think a lot of other countries will think, well, what's in it for us? Not a loss. So actually, we'll do business with who we wish. So I think over the long run, over let's say 2 to 3 years, this tariff policy could be, again, a positive for Moscow.
Yeah, and I guess on that too, as you see though, that price of oil go down, yes, it may have an effect on Russia's budget and their economy, but it's also going to benefit other countries that rely on importing from them, because they are going to be getting whatever product, I guess, on sale a bit as well. So it's an incredibly difficult piece to get your head around, of countries that have partnerships and new partnerships that actually may develop out of this difficulty.
Well, on that front, William, just to give you a couple of examples of how again, I said the Russian economy is a complex system. The global economy is that to the power of 20 or even more. But just to think about some of the obvious consequences of a low oil price scenario, is it would also, within a matter of weeks, if not months, cause enormous disruption to the US oil industry. Now, a simple comparison, if you look at average extraction costs across, let's say, the 3 main producers of oil in the world, Saudi Arabia, the United States, and Russia. So the United States is the largest oil producer, I think, at the moment. Saudi could be, but they've locked a lot of their oil in as part of the OPEC Plus cuts in recent years. But Saudi's second, it's the largest exporter. And then Russia is the 3rd largest producer and the 2nd largest exporter. Now, if you look at the average extraction costs, it varies across fields and regions. And I'm going to use some very rough figures here, so they're not precise. But the average lifting cost in the United States is around about $60 a barrel. You need the price to be 70, so the companies have a $10 a barrel profit, right? That varies depending on where you are. Some are more expensive, some are less. But let's just call it, just for the sake of argument, their average lifting cost is $50 a barrel. They need it to be higher than that to be profitable. If it's lower, they lose money, right? In Russia, your average listing cost, and again, estimates vary and it depends on the exchange rate, but it's been argued it's as low as 25 dollars a barrel, right? Saudi Arabia, it's even lower. It's maybe $15 a barrel. So Russia and Saudi Arabia can cope with a lower oil price for longer than their US competitors. If the price of oil goes down to $50 next week, and then it goes down to 40 next month, and then it stays there, you're going to see American oil producers suffering great financial distress much quicker than you will see their Saudi or Russian counterparts. So that, in very simple terms, I think is something for people to bear in mind. That would have a political economy effect of causing, I would imagine, US oil producers to turn against the administration, because they'll be thinking its policies have caused us immense economic harm. It could cause defaults on bonds in US markets, on corporate bonds of oil companies that borrowed a lot in the past and that won't be in a position to repay them. So there's all sorts of consequences that could flow from this. But what that would then mean, and I'll finish on this because I'm wary of overcomplicating things, but it's just a useful sort of intellectual exercise to go through, is that would then, if it did torpedo a lot of US oil producers, that would then reduce global supply, US supply and global supply with it, a few years down the line. And what that could mean then is when the global economy recovers again, the prices would swing back even higher. And who would benefit? Those countries that didn't have their, those lower cost producers that didn't go out of business. The high cost producers, the people who produce oil offshore in the United States and elsewhere, those are the ones who would suffer in the early stages of this sort of oil price plunge. Those who would survive, most likely survive, are Russia and Saudi Arabia. So when the global economy recovers later on, you would likely see oil prices rebound to an even higher level, maybe back up to $100 a barrel. So if we take a step back and look over this longer period, that's a potential scenario. I'm not saying that will happen, but that is what has happened in oil markets in the past. You tend to get a supply destruction in the course of a recession where the lowest cost producers survive and the high cost are pushed out. And then when the global economy recovers and demand recovers with it, you see prices rise, benefiting those low-cost producers, of which Russia is one of the two biggest. So even 3 years down the line, maybe even before that, this could even benefit Russia. So we have to bear in mind these sort of second and third order consequences of what we're seeing now, and not just look at what's happening on the ticker tapes in front of us each day. There's a lot of different ways in which this can go, and some of which might surprise people.
Yes, no, it's a good place to end. And as I always say with natural resources the resources are there, the oil is still in the ground. It's just pumping out at maybe a lower rate, but it doesn't mean that this is then going to just be, it's not going to exist after this, that it will continue to fluctuate with prices. And as the global economy goes through a massive period of turbulence at the moment, mate, I know you've got another meeting to get to. Is there anything you think that we haven't covered in this that is important for what we're seeing at the moment?
Not that I can think of. I think the point I wanted to make was that last one there about what might happen to oil markets in the future. Perhaps as this goes on, we can maybe come back to it at a later point because I think that would be interesting. But I think that the central takeaway point is here: even if the likelihood of a recession is rising both globally and in Russia, I still wouldn't expect this to prompt the Kremlin to come rushing to the negotiating table because of economic distress. I still think that that's a long way off.
Just really quickly, what sort of oil price would we have to see, do you believe, to have that sort of impact? Like if it went to $10 a barrel, could we see something like that?
Possibly. I think it went down to 10. If we had that, I don't know if you remember, it was in April, May 2020 when you had a period when oil prices were negative in the United States for a very brief period. People were panicking, but it was, as I said, very, very small point in time. You'd have to go down to 10, 15 and stay there for a matter of months. And even then, again, I'd urge you to think, well, what would that tell us about what's going on elsewhere in the world? It would say that you're in a period of approximating economic Armageddon. Russia will be suffering, but at $10 a barrel, I can assure you everybody else will be having a very torrid time too. So, it would be bad. It would be bad, and if it stayed like that, it would put an enormous amount of pressure on the Russian economy. but it's all relative.
Yeah.
I'd expect that others will be really suffering too.
Perfect. Dr. Connolly, mate, thank you so much. We really do appreciate your time, and I hope that you have a fantastic day.
Thank you, Willie. You too.